Hey everyone, welcome back to Corporate Decoder, the place where we dig into corporate filings so you don't have to find out if companies are really cooking with gas or just blowing smoke. Today we're looking at Centessa Pharmaceuticals PLC, and it seems like they're aiming for the stars with a brand new offering. This is an 8K filing, which is basically a report companies file to announce big news that investors need to know about right away. And the big news here is Centessa is planning to sell more of its shares to the public. Centessa sells its ordinary shares, which are like regular company stocks, and also American Depositary Shares, or ADSs for short, which basically represent those ordinary shares but are easier for people in the US to buy and trade on the Nasdaq. They've got two listings here, one for the ordinary shares and one for the ADSs, both trading under the symbol CNTA. So what's the major event here? On the 11th of November 2025, Centessa Pharmaceuticals, the company we're talking about, inked an underwriting agreement. Think of this as a deal with investment banks, in this case Jefferies LLC and Leerink Partners LLC, who are acting as the main go-betweens. They're going to help Centessa sell a bunch of its shares, specifically American Depositary Shares, to the public. This is all happening as part of a pre-approved plan, their registration statement, which means they've already told the government they intend to do this. The plan is to sell about 11.6 million ADSs at $21.5 per ADS. But wait, trees more. The deal also gives the underwriters an option to buy another 1.7 million ADSs if they think they can sell them. This is pretty standard stuff in these kinds of offerings, a way to sell more shares if the demand is really strong. The agreement includes all the usual legal protections and promises for both the company and the underwriters. The actual sale, the closing, is expected to happen just a few days later on the 14th of November, 2025. Now for the money, Centessa expects to walk away with around $234.4 million from this sale, after all the fees and expenses are paid. That's a substantial amount of cash, and if the underwriters decide to use that option to buy more shares, the company could bring in an extra $35 million or so, pushing the total haul closer to $269.6 million. So what's all this money for? Centessa plans to use it to keep developing their potential new medicines or treatments, which is pretty much the core business of a pharmaceutical company. They'll also use some for other general business needs. They didn't just sign the deal, they also hit the news wires with it. On the same day they signed the agreement, the 11th of November 2025, Centessa put out two press releases, one announcing they were launching this share sale, and another one announcing they had priced it, meaning they set the $21.5 per ADS price. This is a pretty important forward-looking statement. Centessa is basically saying that with the money from this offering, plus what they already have in the bank, they believe they can keep running their business and paying for their projects all the way into 2028. That's a good sign. It means they feel they have enough runway to keep going without needing more cash anytime soon. At least based on their current plans. However, they wisely add that this is an estimate and things could change, meaning they might run out of money sooner if things don't go as planned. The actual underwriting agreement itself is filed as an exhibit, which is basically an attached document. You can go read the nitty-gritty details if you want, but let's be honest, who has the time? And then to raise the list of all the supporting documents. We have the underwriting agreement, the legal opinion from their lawyers, Goodwin Procter, and those press releases we talked about. And for the sake of good order and reporting, the cover page interactive data. Now, like most filings, Teresa's standard section about forward-looking statements. This is a legal disclaimer telling you that when they talk about the future, like their plans for using the money or how long their cash will last, these are just expectations and predictions. They aren't guaranteed to happen, and actual results could be very different due to various risks and uncertainties. They're basically saying don't sue us if our predictions don't come true. A lot of these risks are detailed in their longer annual reports. They also explicitly state they have no obligation to update these future statements unless the law requires them to. The report itself is signed on the 13th of November, 2025, just a couple of days after the underwriting agreement was signed. And it's signed by the Chief Executive Officer, Saurabh Sahar. So what's the big picture here? Centessa Pharmaceuticals is raising a significant amount of money through a secondary offering of its shares. This is a move to fuel their growth and development, indicating they have ambitious plans for their pipeline of product candidates. The fact that they also project their funding to last into 2028 is a positive indicator of their financial planning and confidence in their existing strategy. However, it's crucial to remember their disclaimer about forward-looking statements. Pharmaceutical development is inherently risky and expensive, and while this cash infusion is a good thing, It doesn't guarantee success, nor should it be seen as a free pass. In my opinion, Centessa seems to be making smart, proactive moves to secure the capital needed for continued research and development. The decision to go public with this offering and the clear communication about its intended use suggest a strategic focus. The key risk, as always with Pharma, is the success of their actual product candidates. Will they get approved? Will they be commercially viable? This capital is the fuel, but the engine still needs to perform. An opportunity here is that if their product pipeline continues to show promise, the market could very well reward this capital raise with increased investor confidence and a higher stock price. The main weakness is the inherent uncertainty in drug development. A lot can go wrong between the lab and the pharmacy. For now, Centessa appears to be on a solid path to fund its near-term future, but investors should keep a close eye on clinical trial results and regulatory approvals. Alright, that is our breakdown of Centessa Pharmaceuticals' latest filing. What is your take on this offering and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more engaging discussions. Thanks for watching. See you next time.